Buddy, we're going. The spinny thing is spinning, so that means we are live back for another Money Moves. Welcome, Wendy. How are you doing today?
Doing amazing. How
Good,
are
good,
you?
good, good. I'm doing great, man. Doing
Good.
great. Excited about our topic today.
Yeah.
We've had some side conversations, and I've had several client conversations too, which has
Mhm.
been I don't know. I guess that's the universe speaking that hey, we need to talk about this stuff. So we're going to talk about how to get or how to protect your nest egg, your wealth from future healthcare costs, care
Mhm.
costs and things like that. So what do you mean? What does that have to do with financial planning, all that? Well, that's what we're going to talk about. So do me a favor, reach out to your friends and tell them, hey, they're going to talk about protecting your empire. That's what we're talking about today. We'll get started in just a few seconds. And we're back, and I feel like a superhero coming to save people's financial futures. That's right. That's what that is. That logo has done for
I
me.
love
That is
it.
so awesome. That's right. That's right. So, Wendy, all seriousness, you and I were talking about just some conversations you've actually had, right,
Yep.
in regards to this weird place that people go through cycles in life, right?
Mhm.
Everybody's graduating together, and then everybody's getting married together, and then everybody's having kids at the same time and stuff like that. Well, you
Now
get
we're
to a
all
certain
getting old together.
we're all kind of getting old together, and that comes with its own set of this season comes with its own set
Mhm.
of responsibilities, and maybe not just for your kids, right? I mean,
Mhm. Yeah, so I've had a couple conversations. It's weird because it's like one conversation happens and then there's a couple more just like it, and you start to hear these themes. But of people in my age bracket, like the 40 to 55 range, are now, some people still raising kids, but then have parents getting older and are starting to have to take care of their parents. I mean, right off the top of my head, I can think of 3 conversations I've had in the last week and a half of other women in this situation where they're now having to take care of their parents, whether they're losing physical health or mental
mhm,
health, and unable to handle their finances and different things, and feeling stretched because they still have kids in the house and they're still raising their own kids and thinking about college. And so this kind of like aha wake up moment where, even the ones that are financially, in a good place, meaning like make enough money to pay the bills and all of that and save a little bit, but then going, man, I thought I had enough, but I wasn't thinking about the expenses that come with having to take care of my parents and my
oh yeah,
kids.
yeah, yeah, because it's
So,
it's a double whammy, right?
mhm,
And there are ways to protect against that. And the reason we're talking about that from a financial planning standpoint, folks, is for the simple fact that, again, it's not about how much money you grow; it's about how much money you actually get to keep of that nest egg, if you will, right? And a lot of people think, oh, it's just taxes, taxes, taxes. Well, it's not just taxes. I mean, there are other unexpected expenses that can occur.
mhm,
I think I've pretty much debunked the myth that you'll need less money in retirement. That's a lie, right?
mhm,
And this is another one of those unexpected costs where you look at long-term care needs, right? Whether it's for your parents or sibling or whatever the case may be, or maybe even you down the road. You look at that, and there's basically 3 ways or 3 sets of costs, if you will. So for instance, typically what happens, and I always joke with my clients on this, in a traditional household, you got a male, female, and who typically passes away first?
in my family, all the men.
All the men do. Why? Because we're
Yeah.
stressed out, we're reckless, don't take care of ourselves. I mean, it's just the truth, right? That's why our auto insurance is higher. So they're typically a few years older as well. So you got
Mhm,
that. And the lifespan of females is longer too. So you kind of add all that up. So what happens is in that traditional home, you have, if something happens to the husband, the wife is there to kind of offset that, right? They kind of
mhm,
take care of them and things like that. And typically they're in retirement years, and this is kind of a traditional model. But what happens when something happens to dad's gone, and now it's just mom, and something happens to mom. There's nobody left to take care of her. So if the proper planning is not in place, what happens, you go down the path where you start spending down the assets and things like that. You hope they last or whatnot. And that can get pretty expensive. I mean, and there's 3 sets. You can do the in-home, right? And that happens a lot where you've got in-home, but you still need help, especially if there's some medical requirements or things like that. That's kind of option 1. And the average cost for that, and I'll ask you, this is kind of a blind question, so I'm not trying to set you up, but what do you think the average cost is nationally if you were to have mom move in with you and take care of her in your own home? You don't have the housing costs or anything like that. What do you think it would cost every month?
But for people to come in and help take care of her, you mean,
yeah,
right?
So
in-home healthcare.
But it's not like doctors and stuff like that.
Right.
You've got some, nurses assistants or something like that.
Yeah.
What do you think the average nationally, the average cost on that is?
$2,000 a month.
That's not a bad answer. I mean, most people, and I tested that question out a few times, and that's the answer I got back was, $1,800, $2,000. It's actually just under $5,000 per month with all the costs and whatnot. So then you look at the other option, which is, okay, if the parent's still kind of functional or whatever, but maybe there's got some early dementia or something going on. They just need somebody to kind of keep an eye out for them while you're at work, because guess what? If you're taking care of kids and the parents, you're probably still in your working career, right? So there's something called adult daycare. Okay, it's just like dropping off the kids at the daycare center. You drop off mom or dad at the daycare center, and they have activities for them and stuff like that. And it gives them a chance to hang out with people in their peer group and things like that. Now that is a little cheaper. The national average cost on that is about $1,690, about $1,700 per month. And then you go into what we think of as traditional nursing home type of care, where mom's moving into a nursing facility, and there's all kinds, right? You've got the state-run facilities, which that's a whole nother conversation, and how you get into those with the state covering the cost. Basically they take all the assets and you go into spin down mode and things like that. But then the other is if you have some kind of planning, but that's expensive. The national average, well, let me ask you, what do you think the national average for a semi-private room would be? You and a roomie in a nursing facility. What do you think that would be?
Per month?
Per month.
I'm going to go, just because I've been around a little bit, learning some of the stuff. My guess would be 10 grand a month.
That's a really good guess. It's actually a little less than that. Now, maybe 10 grand in certain metro areas and things like that. And actually 10 grand may be cheap. The national average is about 8,000.
Okay.
And that's for a semi-private room, right? You go into your own private room. You're going to.
I guess I was thinking more private. Okay, yeah, semi-private.
Private rooms, the national average is close. It's 9 grand. Okay. But you look at that. So let's say you're 40. Over the next 20 years, you're still only 60. That cost, unfortunately, is not going down. It's projected to double in the next 20 years. And so you can see how that would eat into a nest egg fairly quickly.
Yeah. And to your point, like talking to my friends, we're having that conversation of the stress on them taking care of their parents. But it's that reality of, man, if I don't do something, I'm going to put this on my kids. Right. And like, that's something like until this point in my life, I haven't even really thought about is, because my grandmothers are pretty healthy. I did have one great grandmother in a nursing home, but my grandmothers have been pretty healthy until they go, but seeing friends go through that. And as I'm learning, we really can protect yourself and your family from those expenses for not a lot of money.
Well, and that's the thing, right? I mean, you look at that, the costs and whatnot going up, but you look at that, and ask yourself, do you really want to put that on your kids?
Right.
Because that's something you need to think about for yourself too. Because it can add up to, a big added expense that is unexpected. And most people do exactly what you just said, right? I want to hit on that for a minute. I never really thought about it for me because most people don't think it's going to happen to me.
Right.
Right. Everybody, that's everybody else. I'm in great health. And all it takes is a split-second car wreck. Something happens, you eat some bad food, or you have something genetically going on that you don't realize, and you have a stroke or something like that. I mean, it can happen in an instant, and all of a sudden everything's changed, and it can devastate a family financially. Not only that, put an additional burden on that next generation. So that's kind of the big, So then the question becomes, okay, well, what can I do about it, right?
Mm-hmm.
So, a couple of options. Number one, you've got the traditional long-term care route, right? And long-term care, and there's a lot of great long-term care products out there. And what long-term care is, if you're not familiar with it, it's long-term care. If you're, in a situation where there's certain issues going on and it's more than 90 days, so it's not a short-term deal. You didn't get in a car accident and have to do some rehab for a month or two, and then you're back to normal, right? This is a long-term kind of setup. You've got long-term care insurance, right? Which a lot of people say it's pretty expensive. And actually, I found that it's not nearly that bad. They've got all kinds, right? Just like cars or whatever. You've got the platinum package, that's going to be through the roof. For some people, it's all relative. And then you've got the kind of the, hey, I want to cover just in case. And that is actually very, very affordable, which I was kind of surprised. Again, it's all relative. But the problem I have with that personally is it's kind of like car insurance, right? Car insurance is one of those things. Number one, you can't buy it when you need it. Meaning if I get in a car wreck, I can't call my insurance and say, hey, I need car insurance now. I just got in a wreck.
Right.
A little too late then, right? Same thing with long-term care or life insurance, I guess, anything for that matter. But the second piece is, it's the one insurance you buy that you hope you never use, and yet we pay for it every month. Right? Does that make sense? And what happens? I mean, you have car insurance, right? I'm assuming. Okay, good.
Unfortunately, I pay a lot for all my cars with teenage boys.
Yeah. So teenage drivers will do that to you, but you pay that out, and what happens to all that money at the end of the year if you didn't, when the policy renews, you didn't use it in 2022? What happens to all that money you spent?
Insurance company keeps it.
It goes away, right? You get nothing in return other than the peace of mind and the protection of, if something had happened, I'd have been covered.
Yeah.
That kind of stinks. Long-term care is the same way. You pay it, and it's one of those things that, well, I hope I never use it, but then I don't get any. It's one of those catch-22s, right? So another strategy that you can use to cover long-term care needs or protect against long-term care needs, I guess that's a better analogy, is using what's called a long-term care rider on life insurance.
Tell me more.
Okay. All right. I don't want to keep rambling here. So basically the way it works out, if it's structured right. And folks, we do financial planning. We do all kinds of different products and stuff like that. I mean, from IRAs, Roths, we even do 401ks for business and stuff like that. We also do the insurance world. And I've seen so many insurance policies set up incorrectly, right? It's like, what do they call that? Shade tree mechanics. If you're from the South, I live in Nashville, right? Shade tree mechanic. If you're in the South, you know what I'm talking about. It's the guy down the road who fixes car under his big oak tree, and he only charges you $20 an hour as opposed to taking it to a mechanic that charges you twice that.
Yeah.
Well, I've seen some insurance that looks like that, meaning it was kind of put together okay, but not really. But you can put what's called a long-term care rider on a life policy, and literally you're going to pay pennies on the dollar. And the cool thing is if you don't use it, guess what happens to that money? It stays in the account. Nice. Okay. So you get it all back, or I guess you don't get it back. Your family gets all that money back. Like, okay, well, hey, I was protected against something if it happened. Nothing happened, but my family now gets all that money back. So it's not just kind of throwing it out the window. But don't get me wrong, traditional long-term care strategy, it gives you the protection and it covers for what you need and this, that, and the other, is a great option. But in my opinion, a better option is that life insurance with that long-term care rider. And now, a lot of people have old term insurance. I don't know if you've ever heard that term before. And it's like, what do you mean old term insurance? Well, term life insurance has been around for quite a while. Yeah. Right. And
it's the only thing I knew about before a year ago.
Well, yeah, exactly. And that's what most of us think about. Oh, life insurance. It's you have it for a term and then you get something when you die. Well, if you don't die, then all that money's gone. Well, and you can't benefit from it unless you die. Well, new term insurance, it actually is set up to where you can access that death benefit while you're still living. And you do it through, living benefits. You do it through chronic illness riders and things like that. So if you have some kind of ailment or something like that, you can actually tap into the death benefit to help offset medical costs and things like that. That's the new stuff. And if you've got one of those old term policies, or if you're not sure, reach out to us and let us know. We've got some people we can put you in touch with. They'll actually do a free review for you and give you some options, or tell you, hey, this looks great, you're good to go. But you definitely want to look at that, because that's another way to offset those, healthcare costs down the road using term insurance. So a lot of different options. And I'm going to stop there for a second, Wendy, and let you kind of chime in, because I feel like I've been doing all the talking.
Yeah. Well, I'm not, it's good that you're doing the talking, because I don't know this stuff as much. I'm trying to learn it. We learned a little bit last night about that old versus new insurance. And one thing I think is cool is that term insurance, the new term insurance, that you can convert into something that carries out through the rest of your life. Because I never realized this, you just I just signed the dotted line. Like my insurance guy says, this is what you need. I'm like, okay. And I didn't really know, right, what I was doing. That's why I've loved working with you, because you can actually explain what I'm signing up for. I actually, make the decisions based on real knowledge instead of just blind trust. And,
Ooh, I like that.
And so when I did my term, I didn't realize, in 20 years, this goes away. And then to requalify, I'm older, probably not as healthy, and going to pay way more for it. And my grandmother was in that situation. When my grandfather passed away, they only had term insurance that had expired. They lived off Social Security. When he passed away, she couldn't afford a funeral, right? So guess who pays for it? Her kids.
Yep.
Right.
We did the same for my grandfather.
Yeah. And now in this new world that you've brought me into, I'm learning these things in this new insurance that you can transfer over without having to reapprove on the health side to be insured the rest of your life. And so I think that's really powerful. And I think, it's also like a no-brainer, because it costs like not much more.
No, and that's the thing. And that's really, again, are you going to take your car to the shade tree mechanic? Or are you going to take somebody who actually knows what they're doing and can build it out properly based on your specific needs, not a one size fits all? Because that's the big thing I see out there too. But, folks, you're working so hard to build your empire, right? Putting in all those hours and everything else. Why wouldn't you want to protect it and protect it? And like I said, most people think that, long-term care, I get it, but I'm not going to need it. I want to tell you right now, Genworth did a study last year, and 7 out of 10 people will need long-term care at some point in their retirement years. 7 out of 10. 7 out of 10. So in a room of 10 people, now some people are still going to be, well, it's not going to be me, right? So that's great. You think you're that strong a believer that you're going to be one of the 3 that doesn't need it. Set up something like a life insurance policy with that long-term care rider, because then you're protected, but you don't have to worry about, I'm not out any money because I ended up getting it all back for my family, right? That death benefit. So again, if you have any questions on this, make a comment below. We want to hear about you, or hear about your questions and things like that. Or if you've got a topic in financial services or growth or even insurance or long-term care or anything that you've had a question on, I'd love to see a video. We're looking for content. We'd love to have a video, featured by you. We'll actually mention your name on there as well. So do us a favor, show some love. Whoop, whoop. Click that little subscribe button down below, right? And share it with your friends. That's the whole point of this, right? We created this so you could learn, watch, share, and subscribe, right? And again, Wendy, thanks for being here. This is some good information. So I'm glad you brought this topic up and that we talked about it. But folks, you work hard for what you've got. You want to pass it on to the next generation. Make sure it gets there and make sure you're covered and you're not a burden to that next generation. So everybody have a great week. Money Moves every Tuesday, 11 Eastern, 10 Central, and we'll see you next week.